Well, hello, everyone, and welcome to the 360 Experience podcast and my conversation with Barbara Schreihans. Now, gang, this is going to be an incredibly impactful episode on so many levels. Right out of the gate, what I want to make sure that you understand is that there are going to be 7 very specific powerful tax strategies that Barbara is going to share with you during this conversation that is going to have a significant financial impact. Now, Barbara has more than 50% of her clients in the real estate and mortgage field. So she is incredibly knowledgeable in the space and knows exactly the types of things that you need to be hearing if you're a mortgage professional as a real estate agent. Now, I want to tell you a little bit about Barbara, but before I do, what I want to share is that there are a couple of incredibly powerful tips and suggestions about retirement accounts and the importance of understanding your numbers and managing your business by your numbers through having a bookkeeper. That is going to be something that you're going to absolutely want to understand in great depth. I mean, she really blew me away in this conversation. Now, Barbara is the CEO and founder of Your Tax Coach. She's the creator of Write Off Your Life. And she is also the host of an incredibly successful podcast called Life Changing Money Podcast, which I was fortunate enough to be a guest on back about 9 months ago. She's a dynamic speaker. She has an incredible story that we're going to start our conversation off with that's going to be incredibly inspiring. And then we're going to dive directly into the benefits of being able to understand the tax laws and leverage them to bring more money to your bottom line in so many ways, including how to really leverage the home office write-off expenses, how to take advantage of, as I said, retirement account tax deductibility, et cetera. So before I get into my conversation with Barbara, I just want to remind you, as always, please, if you like this episode of the 360 Experience, give us a like. If you're watching it on YouTube, forward it on to somebody. Make sure you're sharing it with people. The more people that we have as subscribers to the 360 Experience, of course, the more great guests like Barbara Schreihans that I can get on the show. So subscribe if you're not subscribed, forward it on, tell people about it. I think that you're going to find this episode to be really dynamic, and make sure that you listen to the entire thing. And without further ado, my conversation with Barbara Schreihans. Well, hello there, Barbara. How are you?
Hello.
It's
I
so
am
ni-
well. How are you?
Good, good. It's so nice to have you. And sorry for the long period of time that it took for me to reciprocate this conversation. You were kind enough to have me on your show. Um, Geez, a long time ago now, probably 9 months ago.
hmm
And thank you for the sweatshirt, by the way. It's actually a super cool, super high quality sweatshirt. That was nice of you to send that to me.
Yeah, of course. I had to try them first. We got like samples of sweatshirts and we picked the softest ones that we could find.
Oh, they're cool. It's close to Aviator Nation quality. I don't know if you know
Yeah,
that brand. So, right on,
love it.
let's dive in. Now, we're going to talk a lot today about the practical, tactical tax stuff that will be incredibly valuable to everyone who's listening because we're going to dive into um, ways to save money, which I think is everybody's favorite topic. But before we do, I want everybody to get to know you a little bit. I want to get to know you a little bit better. Tell me a story about something that happened in your life that you think has been hugely impactful and pivotal on the direction that you've taken as such a successful entrepreneur. I mean, you're doing quite well, and congratulations on all your success.
Thank you. Yeah, I feel like my entire childhood would probably be a story in and of itself. Um, and I think a lot of really successful entrepreneurs probably have a similar story of just like overcoming hardships. I think that's what makes us be able to get through the hard days in entrepreneurship and business ownership. But growing up, we we grew up in a really bad part of LA, and my parents are drug addicts
Mm,
and they still are to this day.
mm,
Um and I remember like my very first story. If you've ever done an exercise where someone's like, what's the furthest memory back that you can think of? It's really interesting to try to see like
mhm,
how far back your brain can go, right?
mhm,
Well, my first earliest memory that I can think of is my mom stuffing me in a dresser drawer. And so I must have been small enough, right, to like fit into a dresser drawer. And it was because my dad had like come home and he was in like a rage from either alcohol or drugs or something. And she was trying to hide me in my bedroom. And I remember her like moving furniture in front of the drawer or in front of the door so that my dad couldn't come inside. And if that's just like any sign of how the rest of my childhood went, you know, it was always just like them fighting and hiding from my dad just being like a crazy person when he was really high or drunk. And you know, both of my parents throughout childhood kind of had their ups and downs and addictions that they went through. And so then, of course, I feel like a lot of children of parents that are addicts kind of go through their own, you know, rebellious stage. And I didn't have the best role models. And so I too was like a crazy teenager. Um, like I remember drinking at 12 and like stealing my mom's weed and at like 12, right? Like sixth, seventh, eighth grade. So I feel like I got my party stage out of my system a lot younger than probably a lot of people. But when I was 15, my really good girlfriend was like, hey, I met these like college boys and they invited us over to their house. We should go. And I'm like, okay. So of course we told our moms that we were staying the night at each other's houses when we weren't. And we go to this guy's house who I think, you know, they were probably like 19, 20, 21. We were 15. And I remember having one beer. And the next thing I knew, I woke up the next morning and I knew something bad had happened. I couldn't remember the full story, but throughout the years, like bits, more and more pieces have like kind of come back. And what I know to have happened was I had that one beer and I remember walking upstairs to the bathroom. They only had one bathroom and it was at the top of the stairs. And I walk in and a guy walks in behind me and smashes my head against the wall. And I like pass out into the bathtub. And then I remember coming to a little bit in the middle of the night and I'm in a bedroom and I wake up to 4 guys on top of me, one holding each arm and one holding my legs and one on top of me. And I won't go into many more details of that, but I remember waking up and like the silver lining of it all was I had to go to the hospital. And, you know, until that point when the doctor came in, I didn't put words to what had happened, but, you know, the doctor comes in and was like, you were raped and we have to, the police have to come because that's part of their procedure. And you should probably tell your parents, but they didn't make you tell your parents. And they also make you take, they called it the cocktail. But it's like if you could have been exposed to like HIV or any sort of like STDs, you take this like crazy cocktail that's supposed to like 80%, you know, make you not have it or something like that. So I take this thing, it makes you really sick. And they also run blood tests and like all kinds of other things after that happens. And the doctor comes back in again and says, you have cancer. And if I wouldn't have had that situation happen, I would have never been at the doctor. And who knows, like if I'd be here today, right? because I was able to get treated a lot faster. Um, and so even though it was like a terrible situation, I still see like just amazing silver lining with that. And it also kind of changed the trajectory of my life. Like I was 15, like partying and, doing things I shouldn't have been doing. And after that, I was like, I need to get my shit together and, not end up like my parents. And so I ended up graduating early from high school. I graduated at 16 and started going to college at 16. And I went to community college at 16 because you can't go to regular, university at 18. And then kind of took a while to figure out what I wanted to do. From 16 to 20, I was in community school, but I got like 5 AA degrees just because I didn't know what I wanted to do. And transferred to university. I was a business major and got pregnant my junior year of college. I was married at the time, which that's its whole other story, but I got pregnant my junior year and I went to my career counselor and I was like, I'm pregnant. What is like the one major that I should major in that like 100% on the day I graduate, I'm going to have a job? And they were like, accounting. And I was like, oh no, not accounting. Like that sounds so boring. I was doing business and marketing at the time. And so I switched to accounting, and that's kind of how we got to where we are now.
Wow. What a start to the show. I mean, I could take this conversation in a myriad of different directions. It feels insensitive, and somewhat um, silly to want to dive into the subject matter of accounting now, although
Sure.
you segued and teed it up. Um, we'll go there in just a minute. And then maybe we'll circle back later on in this conversation around some things that I'd like to ask you relating to your story. Um, boy, what a catalyst it seems as if all of that traumatic experience was for you. And yet it's so fascinating because I'm acutely aware of the fact that our traumas can be our catalysts and they can also be our the beginning of our end, if you will, right? It's a
Mm-hmm.
choice. So I guess
Yeah.
the question that I have is, was there a moment that you were aware of where you were at that pivotal choice point where you were like, okay, you said I need to get my shit together, but like, was there was there a moment of clarity, that epiphany of like, there is a fork in the road here, and
Mm-hmm.
I can take this right turn and turn all of this into momentum for me to have a spectacular life, because you're an incredibly successful business person. You have an incredibly
Mm-hmm.
successful podcast. I mean, I'm sure, have so many people that look up to you and admire you in so many ways. And yet, wow, that story, it really catches you by surprise. I mean, so anything you want to comment on about that fork in the road and how to take a traumatic event and turn it into a superpower, if we can use that term?
Yeah, I think it really was like when I woke up that next morning and looking back at 15, like I should have never blamed myself. But in the moment, I was like, I was somewhere I shouldn't have been, doing something I shouldn't have been doing, lying about where I was. So it was just like a realization of like, if I hadn't have done certain things, maybe this other situation wouldn't have happened. Now, should it have happened ever in any situation? No, of course. But it was just the realization that, okay, no more partying. You don't need to be doing these things. You don't need to be hanging out with the wrong crowd and that type of, you know, mindset.
Yeah, what I'm hearing is, and for, of course, the listeners to digest, is heed the lesson that when you take personal responsibility for your role in an experience, there's a lot of empowerment that comes along with that versus when we fall into that trap of being a victim of our circumstance and ignoring our role in it. I mean, you took responsibility is what I'm hearing and saying like, I shouldn't have been there. I mean, you could have
Mhm.
easily said, I can't believe this happened to me. And I'm sure that you did have that conversation because it would be just to do so. But it's that personal responsibility for your role in it and saying, like, I need to make better choices that was the catalyst and springboard for your success. So, wow, what a powerful
Mhm.
story. And thank you for getting us started with that. So, I want to know more about your career and what got you to where you are. But I think I want to start, if we can just get a little bit tactical and add some value on the accounting side of things, and then maybe
Mhm.
kind of dovetail into the rear view mirror a bit in terms of how you got started, maybe picking up from your counseling advisement that the guaranteed job you have is to be an accountant. So a lot of the people that are listening are in a couple of different categories. They're either employees or they are business owners within the
Mhm.
mortgage space. I mean, we certainly have listeners in the real estate space, et cetera. But I know that you work with a lot of mortgage people. And
Mhm.
I guess one of the things that I'm always curious about is what are the things that you see as a tax professional that are the great missed opportunities that people that are listening should know about, where they're leaving money on the table because they're just not doing things in a manner that they can be within the tax code, within all legality. Um,
Mhm.
Maybe you can get us started with some strategies and some tips there.
Yeah, the biggest thing I see are business owners not structured correctly. And so, I think for a lot of us, we start a business and we're like, let's just get our LLC or maybe even nothing before they get started. But eventually, I think a lot of people get their LLC. But when you are an LLC, you're actually taxed at the highest rates. And so, at some point, it probably makes sense for most business owners, not all, but most, and especially those in real estate or mortgage, to eventually become an S corporation. And that is just a tax election. You're still an LLC for all intents and purposes, but for taxes, you're an S corporation. And what that can do is save you up to $22,500 per year. And that's because as an LLC, you are taxed what's called self-employment tax. But on your tax return, it doesn't say that. It's just called other taxes. So people don't really pay too much attention to it. They're just like, oh, yeah, I paid X amount in taxes. Um, but if you can switch to an S corporation, you can get out of most of that self-employment tax. And so I see that a lot. And I think a really good point to switch from LLC to S Corp is around the $40,000 of profit per year. So not revenue, but profit. So after your expenses, that's about the time it makes sense in terms of cost benefit analysis, because you will have, another tax return to pay for, and you will have to be on payroll and those types of things. But at about 40,000, you're making money on that switch over. And if you're making 100,000, you're saving 15,000 in taxes every year. If you're making 140, that's where you get the 22,500 of savings. So entity structure is really, really important. And then I think a lot of it is just how you spend your money and not writing off the things that you can tie to your business that maybe you weren't even aware of.
Mm.
And so,
Yeah, let's
like, we
go into
have the
that.
trademark. Yeah, we have the trademark Write Off Your Life, because that's the name of our course. And it's true, like, we love teaching business owners how to write off their life. And so, turning seemingly personal expenses into business. For example, I think whenever any business owner is traveling, they can link it to business in some way, shape, or form. Whether they're going to a conference or they're going to a retreat or they're meeting with a colleague or networking in some way, shape, or form. Like, similar to our industry in taxes, just like mortgage and real estate, anyone can be your client at some point or another. So whenever you're talking to anyone, you're probably telling them what you do. And if that person can at any point be a client, you just now had a prospect meeting. right? And those types of things are travel expenses. Those types of things are meals deductions. And so we love helping business owners be like, okay, how are you spending your money? What are you doing? How can we get more of those expenses into your business and then save you money on taxes?
In the event of an audit in the situation that you just described, what type of proof that would be required to the auditor to make that a legitimate, you know, business meeting for business development, so to speak? Like, what are they going to ask for?
Yeah, they basically ask for like the who, what, where, when, why. And to capture all of that information, like I keep everything on my calendar. I live and die by my calendar. If there's not like an hour blocked off for something, there's a problem. But say you have a dinner blocked out on your calendar from 6 p.m. to 9 p.m. So that's already the time block. You probably have the location in there, so that's the where. And then after a meal, I'll go back into my calendar and put who was there and what we talked about and why that's important for business. So whether it was just networking, prospecting, maybe my husband and I were chatting about who's the next hire is going to be or what our marketing strategy is for the next quarter. And so really like keeping track of it in your calendar, I think is the easiest way. And then of course, keeping receipts for everything.
You know, one of the the obvious is you got to make sure that your calendar stays intact for years and years and years into the past, right? Like, I mean, because some calendars have a setting to where they kind of wipe themselves out after 12 months because you may need the access to what transpired 4 years ago in the event of an audit.
Mm-hmm.
So just a footnote to that. But one of the things that I run into more often lately is loan originators, and I would imagine real estate agents fall in this category too, that are W-2. So their company treats them as an employee. Therefore, and in the case of an originator who's either just an originator or a branch manager that might be running a net branch operation, you know, they have to have
Mm-hmm.
money in their operating account in order for them to be able to run expenses such as that retreat or conference, um,
Yep.
or any other types of expenses through their P&L. And because business has slowed down, a lot of companies have put some restrictions on that, and originators are running into challenges where they're not able to write off things because they can't run them through their P&L, or if they don't have a P&L, they have a limitation as to what they can write off as deductions for an employee status. I've often, my personal story is that I've been an entrepreneur my whole life like you. So I haven't been an employee since, I mean, I'm 56 years old. I think the last time I was an employee, I was 25. So it's been a really long time. I'm like, I'm
Mm-hmm.
so used to having this freedom to do tax deductions in the manner that you've just described. And I've often
Mm-hmm.
even said to my clients, I'm like, hey, you know what? You need to figure out a way to have like at least an LLC on the side that has some income that you can spin into that LLC, so then you can take the write-offs, because if your company's clamping down and not allowing you to run these legitimate expenses, such as coaching with me as an example, through your
Mm-hmm.
P&L, and you're having to pay for it post-tax, I mean, you're leaving a lot of money on the table. So I know I just said a lot. Can you comment on that and maybe some creative ways for originators to be able to make sure that they have this flexibility that I'm referring to?
Yeah. So one of my favorite strategies with people in the mortgage industry that are W-2 is if you can run expenses like you're saying through their own P&L. And I love when we'll just say you can run marketing expenses through your P&L. And what that will do is lower your W-2 income because the income's not coming all to you. But that marketing income goes into your or your spouse's marketing company. And then you can use that income to run other expenses through. So say, for example, your company allows you to run $5,000 a month in marketing expenses. So you send that $5,000 to you or your spouse's marketing company, and then you can use that $5,000 however you'd like for marketing or whatever other business expenses in that business. And now you just lowered your W-2 by $60,000 a year, 5,000 times 12. So that's my favorite strategy
Wait,
if you can use it.
I want to walk through that one more time because I didn't quite get that. So let's use me and my wife as an example. Let's hypothetically say
Mhm.
I'm a loan originator and my wife starts her own marketing company. And I spend
Yep.
$5,000 a month on various marketing activities, including having a videographer for my reels on Instagram and boosting my
Yep.
posts and all this kind of stuff. So what you're
Mhm.
saying is to pay or to have the company pay rather than the consultant that's, managing my Instagram accounts, pay my marketing company. Is that what you're saying? And then my marketing company pays a consultant? Mechanically, how did that work? I lost you there.
Okay. Yeah. So mortgage company pays marketing company $5,000 a month.
Okay.
Marketing company then can allocate it however they would like. Maybe you spend 1,000 of it on business meals because you are out networking. Maybe you spend 1,000 of it on a social media manager, 1,000 of it on a videographer, et cetera, et cetera. So that's kind of how it worked mechanically. And on the back end, your W-2 from the mortgage company now just lowered by 60,000 because that money didn't come to your W-2. It went through
Mhm.
the P&L. Mm-hmm.
Yeah. So another way of saying that, to dig a little bit deeper, is that if I worked for a mortgage company, and I just went to my branch manager and said, "Hey, look, what I would like is every month I would like $5,000 of my income from funding mortgage loans to be paid to my marketing company or to this marketing company and
Mm-hmm.
deducted from or debited from my commissions, for lack of a better term." So I'm showing less
Yep.
income and I'm diverting the income to the marketing company, whereby I have the flexibility to write off expenses associated with that. Is
Yeah,
that
exactly.
accurate?
And now you're not subject to really high taxes on your W-2. Now you don't have the federal tax, the state tax, Social Security, Medicare. So there's a big tax savings in that. Um, and they're legitimate marketing expenses. They're all things that probably every mortgage officer is already doing. Like we mentioned, promoting on social media, going out and having business meals, having a videographer, photographer, and those types of expenses.
What other types of deductions do you think get missed by real estate and mortgage professionals that are easy ones to be able to justify, for lack of a better term? You mentioned conferences, you mentioned marketing, and meals and entertainment. Is there anything else?
Yeah, so travel, like I mentioned, vehicle deductions are a big one because even though you might think like, oh, I work in an office setting or I just work at home, you're still driving a lot for business, whether you're going to, coffee with a coworker or a business lunch, a business dinner, you're driving to the airport for that travel to go to a conference. You're still using your vehicle a lot. And so basically the percentage that you use your car for business, you can write that percentage off of your car. So say you bought a $50,000 4Runner and you use it 60% for business, you just got a $30,000 expense on your profit and loss
Mhm.
because you can depreciate your vehicle. And in addition to that, you can now take gas expense, repairs, maintenance, insurance. But that's when you use the actual. I think a lot of people default to mileage because it's easier to track. But, then maybe you only drove 10,000 miles for business, and that's only like a $6,000 deduction versus the 30,000 for your 4Runner plus, gas, insurance, repairs, all that's probably another 10 grand, 20 grand for the year.
Well,
So vehicles expense is a big one.
and speaking of vehicle, excuse me, speaking of vehicle expenses, there have been a lot of credits available, at least in the state of California, over the last few years for everything from electric vehicles to, I believe,
Mm-hmm.
my accountant was telling me this about a year ago, that he encouraged me to buy my car out of the lease because then I would get an immediate deduction for having bought the car. Do you know what I'm referring to there? And can you comment on that?
Yeah, that's definitely like a gray area right now because there's no case law on it, but I do like the strategy. So kind of what you're explaining is when you lease a car in your business, you get to take all the lease payments as a deduction. You don't get the depreciation because you're leasing it. It's not technically yours, but you do get to take the lease payments. Then at the end of your lease, you buy out the lease and say you had to pay the dealership or the bank $30,000 for the rest of your lease. You could then depreciate the vehicle for that 30,000 because you haven't otherwise depreciated it. And so you're kind of double dipping, and there's no case law on it yet. So I would be interested to see once the IRS does have case law on it. But to me, you haven't depreciated it yet. So why not, do it again? So I do like that strategy. That is good for vehicles under 6,000 pounds. And that's because for vehicles over 6,000 pounds, you can depreciate 80% of the cost of the car this year in 2023. 2022, it was 100%. And so a lot of people, at the end of the year, they were buying big trucks and SUVs and all sorts of things that were over 6,000 pounds, because even if you made one car payment or even none, if you bought it in December, you're probably not making a car payment till January, but you could write off 100% of the car. And so in 2023, it's still 80%. So that's pretty good for any car over 6,000 pounds. But if you want to buy a smaller car or like a sports car or something that's under 6,000 pounds, you don't get to take the big deduction for depreciation. And so the way around that is to lease it, because you get to take the full amount of your lease payments.
What are the common denominators of top originators in the mortgage business? They're well scripted. They have a system for marketing themselves that generates leads. They manage an effective database, and they have strong referral partner relationships. The other common denominator of many great originators is that they have a business and life plan, a roadmap, a guide for them to achieve success, and they have an ally, a coach, who assists them in the successful implementation of that plan. Performance Experts Performance Accelerator private one-on-one, one-year coaching program is now accepting applications. This is my company, and these are my certified coaches that specialize in the mortgage business. Go to www.mortgagecoachingnow.com and click on Get a Coach, or go to the show notes and click on the link that's provided in this episode. Now let's get back to the show. What about home office? That's obviously something that is more prevalent now than it has ever been. Post-COVID.
Yeah.
I've had a home office for 15 years, so I have some familiarity with what you can write off. But I think a lot of people don't realize, you can carve out a certain amount or certain percentage of your home if you legitimately have a home office and and deduct against that. So maybe you can explain a little bit about that for us as well.
I still hear today from a lot of prospects coming in, like, isn't a home office a red flag? And I think it was a red flag like 20 years ago when nobody was working from home. But, nowadays everyone works from home. Everyone has a space in their house that they have a desk and a computer. And so if you are legitimately working from home, you have a designated space for that. You can take a percentage of your mortgage interest, your property tax, your insurance, every utility. If you have a cleaning person, a landscaper, a pool person, security system, like, the expenses add up. And so try to get as big of an office space, home office space as you can, including a bathroom that's designated for a home office, because then you have a bigger percentage of square footage that you can then write off. And so just like with vehicles, there's two ways to write them off: mileage or depreciation. Home office is the same way. You either take actual expenses, or there's something called the simplified method, which unfortunately, I see most people using the simplified method, but it maxes out at $1,500 a year. And so you're only getting up to $1,500 as a deduction. But when you use actual expenses, you can take, our clients typically will get like a $10,000 deduction if they take actual expenses. So make sure, look on your tax returns under home office, and it'll tell you if you're taking simplified or actual. If you're using an online software, it will only take the simplified method because it doesn't know how to calculate the bigger calculations. And so you're missing out on a lot of deductions.
So again, not having that much familiarity with this from the fact that I've always owned my own companies, but what is the difference between standard deductions and itemized deductions? Could you explain that?
Yeah, so that is on your personal tax return. So nothing related to business returns or anything like that. But every person filing a tax return gets what's called a standard deduction. This year it's $13,850. So if you're married, it's double that. So let's say for easy math, $28,000 is your standard deduction if you're married in 2023, which means if you had $100,000 of income, you automatically get to take off 28,000. And so now you're only taxed on 72,000. That is the standard deduction. Now you can choose to itemize. You'd probably only itemize if you're over that $28,000 because you automatically get 28. So it's either you get the 28 or you get itemized if it's higher than that. And what itemized deductions is comprised of are all of your medical expenses for the year, your mortgage interest, your state tax, your charitable deductions. Those are like probably the top 4 that can get you over that 28K mark. Now, if you have a pretty low mortgage amount, you're probably not hitting that 28,000 mark. So something I hear a lot that I think is a big misconception, especially in the real estate industry, is buy a house because you're going to save money on taxes. Well, since the standard deduction was increased so much over the last couple of years, a lot of times you don't actually get a benefit from buying a house anymore because your mortgage interest isn't more than 28,000 a year. Now, if you're in California, you're probably over the 28,000 because houses are expensive. But they also limited the mortgage interest to 750K. If you have a mortgage over 750, you don't get to take the mortgage interest above that.
Yeah, one of the things that I've been playing around with, I'd be curious to get your take on this, is benefit. It seems as if the benefits are so much more extreme to be an investor in real estate, a landlord.
Mm-hmm.
Now, of course, we both know that there are a lot of headaches and bullshit that you have to deal with as a landlord a lot of the time. But I mean, with depreciation, the ability to write off so many more things, and then what you just highlighted as it relates to standard deductions, sometimes I think it might make more sense for people to rent their primary residence and utilize the money that they were going to have invested as a primary and buy 1 or 2 rental properties with it and generate passive income. What are your thoughts on that?
Yeah, I love that strategy. I have friends that do the same thing. They rent their primary and they use that money that they were going to put on a down payment for their primary house and they buy rental properties, or they house hack and maybe they buy a duplex and stay in one and rent the other because they can take depreciation. And it's a really good tactic, especially for W-2 earners, because as you know, if you're a W-2 earner, it's really hard to save money in taxes. Really, the only ways to do it is if you have high medical expenses, but that's money out of your pocket. If you're maxing out your retirement, but some people don't want to put all of that money in retirement, they want to put it in real estate. And so a good kind of way to get out of that is if you make less than 150, so less than 150,000 a year, you can buy a rental property, and probably for tax purposes, that rental property is at a loss because of depreciation. And that loss can offset your W-2 income. Now, if you're over 150, you don't get to take your real estate losses. They kind of save up every year and you have like a bank to use later when you sell the property or when you have a gain somewhere else, profit somewhere else. Unless one of my other favorite strategies is if you're a W-2 earner and you get an Airbnb that you manage, because now that's active income. And so that loss from your Airbnb can offset your W-2 income there. So for W-2 earners, I love Airbnbs because you can take huge expenses. You can also take or do a cost segregation study. I don't know if you've heard of those.
Yes,
but
I have.
But probably some of your listeners haven't. And so I'll try to simplify it as best I can. For any rental property, you take what's called depreciation, and the normal depreciation is over 27 and a half years. So what that means is if you bought a rental property for, let's say, $275K, and I use that number because you can divide it by 27 and a half very easily, you get $10,000 every year of depreciation. So say you get $12,000 of rent income, you automatically get to take off 10,000. So you're only taxed on 2. But you're going to have mortgage interest and property tax and insurance and all that. So you're probably at a loss. Great. Or you can do a cost segregation study, which takes that building that was 27.5-year property and breaks it down into, okay, $15,000 of it is windows, which is 5-year. $20,000 of it is flooring, which is 5-year. $2,000 of it is paint, which is 5-year. And so it breaks every single thing down in the building, down to the studs, down to the nails and screws. And now it might say, instead of $10,000 in depreciation this year, you get to take $60,000 or $70,000 of depreciation. So now, instead of, like, let's say a $5,000 loss, you're now at a $75,000 loss. And that $75,000 loss will offset $75,000 of your W-2 income, which means you're going to get a huge refund check as long as you're withholding taxes on your W-2. So cost segs are amazing. You have to get a CPA to do them and sign off on them. We love them. We do them for every one of our clients that have an investment property. And most people don't know it, but cost segs are required. And if you're audited and the IRS sees you were supposed to depreciate something over X amount of years and you did it over Y, they'll be like, you were supposed to take this and you didn't, so we're taking it, and you never get to take that depreciation. It's kind of crazy.
Wow. Wow. And cost segregation studies cost about what, $5,000 to $7,000, something like that?
With us, they're $39.50 for anything up to 5 doors. And then above 5 doors, it's a little more expensive.
So you guys do them. You actually do them as a company.
Yeah.
I have a client who Sosi knows quite well, who I won't say his name because I don't want to violate his privacy. Perhaps you even know him, who made a few $1,000,000 in income the last few years when rates were really low, and didn't have to pay any tax at all because he has such a substantial real estate portfolio.
Yeah.
With cost segregation studies on all of them, to where he could accelerate the depreciation. And I mean, it was just a crazy profitable year for him without having to pay any. I mean, I'm super jealous when he broke it all down for me. I'm like, oh my gosh, you're way smarter than I am.
Same with us. Like, we love depreciation, or we love real estate simply because of the depreciation. And like, even with syndications or deals that like our friends will send to us, we're like, we're not doing it unless you get a cost seg study. And they're all like, we're doing a cost seg study. Like, investors probably won't invest in most syndications unless they're doing a cost seg study.
But the majority of the benefit in investing in real estate, correct me if I'm wrong, is if you are, if it's a partnership of some kind, you want to be the general partner, right? Like if you're a limited partner, you lose a lot of the tax deductibility. Is that correct?
Sometimes. So when you are a general partner, you're active in it, right? So you can take the losses. If you're an LP, but you otherwise limited partner, but you're otherwise involved in real estate, this is where we get into the real estate professional rules. You could elect to like combine all of your real estate activities together, and then you still might qualify as rep status and take the loss. So sometimes you can, and sometimes you can't. We always try to find a way for a client that has really big real estate losses, try to find a way for them to take it, whether it's like, is it worth it enough for maybe a spouse to quit their W-2 job and just be a real estate professional? And that doesn't mean become a real estate agent. A lot of people think that that's what that means. It's not just getting your license. There's plenty of people that don't have their license that qualify to be a real estate professional. It's based on number of hours that you spend in real estate, whether that's analyzing deals, flipping properties, being a landlord, collecting rents, property management, things like that. And so there's a lot of ways you can qualify, but I think a lot of accountants, they just see like, oh, you're a W-2 earner, you can never be a real estate professional. And it's because they're being lazy. But we always try to find a way, like somehow, some way for someone to qualify so they can take those big losses.
So how familiar are you with, I would imagine you are familiar with the tax laws as it relates to cryptocurrency. Are you pretty up to speed on those?
Yeah, we love crypto.
They're
I
pretty
did a
liberal.
master class on crypto.
Okay, so let's talk a little bit about it. So there's a lot of people don't realize, and I know that some of this stuff may change shortly, but even if you're not invested in crypto, when you hear about this, you'll understand why you might want to consider it because there's, at least at this time, it's pretty loose, right? Like you can, I mean, the first in, first out rule doesn't apply. Is that correct?
Yeah. So let's see, how do I easily
Also, the
explain
30,
this?
30 days, you don't have to wait 30 days. You can sell like on the 31st of December and buy it back on January 1st, right? Right away.
Yeah. And so we told all of our clients about this towards the end of the year last year. So what he's referring to are the wash sale rules. So in the stock market, for example, you wouldn't be able to sell a stock at a loss and then rebuy it within 30 days because of the wash sale rules. And that's really to keep people from taking big losses on their tax returns and then just rebuying and having the same position later. But it doesn't apply to crypto because crypto is not a stock in the eyes of the IRS. And so you can, like, say, for example, this was popular, really popular last year because crypto like tanked, right? And so we went from 60,000 Bitcoin to 15. And you could sell all of your crypto, take a big loss, and then just rebuy it the next day. So you have the same position, but you have a taxable transaction that shows you just lost 45K on buying Bitcoin, right? This year, less so, it's kind of more stable than it was last year, but those same rules still apply. So if you do have crypto losses, sell them if you want to and just rebuy them the next day. So then on your tax return, you have a loss. Now, I'll say you're still limited to the $3,000 a year loss. So if you don't otherwise have gains in other places, you're only going to get a $3,000 loss, but it will carry forward for when you do need it if you do have a crypto gain later.
What are your feelings on cryptocurrency in general? Do you have an opinion?
I think a lot of it is crap, but I think Bitcoin and ETH will stay around for the long haul. It's the other ones that are, kind of up in the air. But I mean, I love Bitcoin. I think
Yeah.
that we're going in that direction. I mean, look, even on tax returns this year, the IRS, if you look on your tax return, it asks for your name, your address, and before they even ask you if you have kids, it says, did you buy, sell, hold cryptocurrency? So they want to know about your crypto before they even want to know about your kids. So I think governments are starting, you've seen it like across the world, governments are starting to adopt cryptocurrency. And I think it is a wave of the future. I mean, it will keep people from fraud. It will keep people from hiding money from the IRS. And, it's a way for them to collect more in taxes because everything has, everything's on the blockchain.
Yeah, the thing that's going to be really interesting. So I was reading an article this morning, actually, that was sent over to me by a buddy of mine about a big move that Costa Rica just made to adopt or Bitcoin, not cryptocurrency, Bitcoin in particular, as a means of payment. And it's an application that they've put into their ecosystem within the country to where you can easily convert Costa Rican colones to Bitcoin and back, and you can transact. So the thing that's going to be really fascinating is, so I own a decent amount of Bitcoin, and then I have some solid positions in Ethereum, and that's it. So thanks for validating my thinking as well as those being the only two worth owning. When I go to, at some point in time in the future, should I use BTC as a currency? Because right now I'm using it as an investment, a store of value, but at some point in time, I may transact with it. And when that happens, how the hell are they going to track the taxation on that, right? Like if I have a position of BTC that I bought at, $15,000, and God willing, let's say it's at $100,000, 3 years from now, and I'm decide, all right, I'm gonna use, some sats to buy a car for 50 grand, or like a half of a Bitcoin
Mhm.
to buy a car for 50 grand. There's going to be a taxable event there for me, isn't there? And how are they going to track
It's a hot mess, man, for accountants right now because
that?
there is no like rhyme or reason and there's no good I mean, there are apps out there that supposedly like track your taxable transactions, but it sucks. It doesn't really work. And because of the first in, first out, so that rule too. So say you did buy Bitcoin at 15K and it gets to 100. Well, you probably bought some Bitcoin along the way as well, and maybe you bought some at 90. You
Mhm.
could say, well, I'm actually using the 90K Bitcoin
Yes.
for this transaction. So you only have a 10K gain, not the 15. So that's also a cool rule out there. But yeah, I mean, until they figure out, I think until like all governments adopt it and they can figure out a way to track it better, it's just kind of a hot mess until then.
Yeah, it is, but there are a lot of compelling reasons as to why, like the more that you study Bitcoin in particular, I mean, I just recently aired an episode with Robert Breedlove on my show. I don't know if you know who Robert is, but he's brilliant. It's a terrific episode, and I mean, he really does a great job of explaining the why of Bitcoin.
Mm-hmm.
It's compelling. It's compelling to you. I could see a future to where, I mean, we might even be at the point already where it's unstoppable. I mean, especially if you're holding your Bitcoin or any cryptocurrency in self-custody. It's going to be interesting to see where that goes. Let's get off the Bitcoin narrative. I could go on for forever. I want to talk about retirement accounts. So, like, this is an area where I feel a lot of people miss opportunities.
Mm-hmm.
So, what are some things that people should know as it relates to banking their money in retirement accounts for, either tax deferred or non-taxable gains?
There are so many. First, I would say, like, if you're a business owner, you probably should have a retirement account in your business because you can funnel tax-free money into those retirement accounts. It's a business expense on your business that year. You save money in taxes and then you're saving for yourself in retirement, which I think a lot of business owners forget to do. They're just like, oh, I'll be able to sell my business later. But the harsh reality is most businesses don't sell later down the road. And so you should be saving for your own future. I love my favorite accounts are solo 401ks for anyone that owns a business that doesn't have other employees. And so it's called that solo 401k because it just means you're not allowed to have anyone else. Now, spouses and kids don't count as employees. So you can still have spouse and kid employees and still have a solo. And the big perk of that is you can put up to $66,000 a year away into that account. So way higher than a traditional 401k. That limit this year is 22,500. So you're almost 3 times the amount. And then I always love adding a spouse into your business, even if for a small percentage of ownership. But now you can put $66,000 away for their retirement. So $132,000 that you now went from it's going to be taxed because that's profit in your business to putting it into your own retirement account. Then, pro tip, most people don't know this, and even your financial advisors probably don't know this, but they can set up your solo so that all of it goes into a Roth. So then your money that's going in there can grow tax free. And when you take it out, it's tax free as well. And it's not limited to the $6,000 or $6,500 limit that a regular Roth is subject to. So I think every business owner that can qualify for a solo should have a solo and, obviously max it out as much as you can. And I say that even being a lover of real estate, like we still invest in real estate. We have lots and lots of doors. But I also think it's important to have other streams of income and wealth as well.
As I'm listening, excuse me, as I'm listening to you share all this, what I'm aware of is the importance of kind of equate it to a doctor. Like, so a doctor, I'm hoping my doctor is consistently reinvesting his time into continually educating himself on the latest developments in the medical field to ensure that he's up to date on anything that I might need to know about as his patient. And
Mm-hmm.
it strikes me that it's equally important for a CPA such as yourself to consistently be re-educating yourself, attending seminars, things of that nature, because the tax laws are consistently changing. And I would imagine there are a
Mhm.
lot of CPAs out there that are behind, and their clients are suffering for that. Um, what do you do to make sure that you're up to speed on all of this stuff all the time?
One of our core values is always a white belt, which to me means like you should always be learning no matter where you are in your industry or field. And so we put a huge emphasis on training. Like we go to tax strategy seminars and tax and legal seminars, and even like things for attorneys and financial advisors, because I do think it's all tied together. And so we just make it a priority that we're going all the time. And yes, it's very expensive, but I also think it's really expensive to do your clients a disservice and not know these types of things. And so, yeah, I think it's just putting it as a priority and actually going to them and listening while you're there is important, not working and being on your computer and getting distracted and then implementing afterwards. And so, yeah, we just make it a priority. Plus I really do love school. I think if I could, I would just be in school forever because I love learning.
Did you ever think that, going back to your story from the beginning, did you ever thank that person for telling you that the major that you needed to focus on was accounting?
Yeah, actually last year I ran into him on LinkedIn. And so we were like messaging back and forth, and he wants me to speak for the entire business school, which is kind of cool.
What
Um,
university did you go to?
Cal Poly, San Luis Obispo.
Oh, wow. Right on Central California. Cool.
Yeah. And so I think that'll be really fun to kind of like give back to them and all the kids there.
Congratulations, and what a nice honor that is, for you to be able to go back to your alma mater and to be able to give back to them and have probably a nostalgic experience, I would imagine. That's super cool. Um, I'm gonna ask you kind of a two-part question as it relates to, kind of tax planning, because as a mortgage professional, for the 15 or so years that I was one, I did a really effective job of cultivating relationships with CPAs. Not a lot of them, but had three really good ones that were tremendous referral partners, and I was able to refer a lot of business to them. And one of the areas that I really focused on when consulting with a client was specifically asking them about their relationship with their existing tax preparer, and
Hmm.
ask them to rate the person on a scale of 1 to 10, and if they gave me anything other than a 9 or a 10, I would say then I would lead into some questions that would kind of expose some potential deficiencies. And one of the things that I noticed a lot is that very few people actually do any what I refer to as forward tax planning, like throughout the year. Like right now, as we're recording this in September, I mean, this is the time of the year in my mind that you need to be looking at things for year's
Hmm.
end, not, in late December when everybody's scrambling and it's kind of too late. And
Yeah.
one of the ways that I've always personally done that is by having my own bookkeeper. I mean, I haven't been without a bookkeeper for 20 years. And when I say my own bookkeeper, I don't mean just for my business. I mean, I certainly have one for my business, but I also have one for my personal life. She pays
Nice.
all my bills. She does a monthly, profit and loss for me with the general ledger.
Hmm.
And I know how much it costs to live my life. And I know where the money is going and in what buckets, and I can course correct and make adjustments, which I do about every 12 to 18 months. I'll be like, hey, you know what? Like, let's get rid of these three subscriptions. Like, I haven't looked at that channel on,
Yeah.
it's like
Yeah.
39 bucks a month or whatever it is. I mean, but it's astonishing to me, especially in the field that I'm still in when it comes to my clients being in the mortgage profession, and they're in the money business, how few
Hmm.
people actually really know where their money's going and do any
Yeah.
type of strategic planning on an annualized basis to really maximize. And I think that in closing, the mentality as well, shit, I mean, you're paying, $5,000 a year to have a bookkeeper pay your bills and do your books or whatever it is, super part time. but I'm like, I can't afford to save that money. I mean, like I make so much more money than what I pay just by having the optics on the situation. So
Yeah.
I'd love for you to comment on this and share a little bit about the importance of tax planning, on a consistent basis, and maybe anything that you'd like to say about having a bookkeeper and any of the other pro tips you have.
Yeah, there's so much to unpack there. I would say let's start with bookkeeper stuff. So I think, like you mentioned, every single person should have a bookkeeper if they own a business. And that's really because you can't do anything unless you know your numbers. And if you can't say every month what your profit and what your expenses were every single month, then you can't plan anything because you don't actually know if your profit was 10,000 or 1,000. And there's different strategies involved at those different levels. And so knowing your numbers is like the most important thing. And, we make people get a bookkeeper, whether it's us or someone else, before we even can work on their strategy. So having a bookkeeper, and to your comment about well, I can't afford to have one, or I can use that to save somewhere else. Think about how much time that is saving you every single week,
Yeah.
month, year, because they're organizing your receipts, they're categorizing your transactions in the most tax advantageous way, I hope. And, it's just a worry off your shoulders. And I think that that's priceless. So a bookkeeper is worth their time and money, tenfold. But then once you do have a bookkeeper, like we're a tax strategy firm. And so I would say if you're just using a preparer, you need to find someone that is a strategist. Every one of our clients are on monthly retainers, and that's because we want people to meet with us more than just once a year. Like our minimum is every quarter, but we have a lot of clients that meet with us every single month. And it doesn't have to be this like all day long process that takes a bunch of your time. It's just, a check-in for 30 minutes a month of, hey, this is what we've done this last month. How's your business doing? What types of transactions are upcoming that we can plan for? What type of real estate are you going to buy? And let's set it up correctly. And so really touching base all year round. People ask us all the time, they're like, how's tax season? And I'm like, well, we're really busy all year round. We don't really have like an off season. And that's because you should be planning these types of things all year. Taxes can be your biggest expense of your life. And so you should dedicate some time and effort and energy into it, and it will be worth it.
Yeah, well said. I mean, it's it's pretty crazy to me how many times over the last 25 years my CPA has said to me, okay, here's what we're going to do, and it's going to save you, $26,000 or $34,000 or what, big numbers, like
Yeah.
often, and it's like, holy crap, like if I didn't have somebody that was on top of that, like how much money would I be leaving on the table? It's an astonishing number, and I just don't think people
Yeah.
realize how much you can save. I mean, even just your solo 401k moved into a Roth, which I'm going to definitely talk to my CPA about that and make sure that we can do that as well. But like that in and of
Yeah.
itself, like think about how much that saves, especially if you can do it on an annualized basis. What are the common denominators of top originators in the mortgage business? They're well scripted. They have a system for marketing themselves that generates leads. They manage an effective database and they have strong referral partner relationships. The other common denominator of many great originators is that they have a business and life plan, a roadmap, a guide for them to achieve success, and they have an ally, a coach, who assists them in the successful implementation of that plan. Performance Experts Performance Accelerator private one-on-one, one-year coaching program is now accepting applications. This is my company, and these are my certified coaches that specialize in the mortgage business. Go to www.mortgagecoachingnow.com and click on Get a Coach, or go to the show notes and click on the link that's provided in this episode. Now let's get back to the show. I want to know more about your passions. My belief, my intuition is that there are a lot of them, and they go beyond that of just accounting. I know that you like to speak publicly. I know you and Sosi have done some stuff together. Thank you to him and to you for inviting me to be a part of it. And I'm sorry that it didn't work for my schedule. what are the things that you what are the things that you're passionate about, and where are you headed in your business and personal life to pursue those passions?
I think so, at least for business and entrepreneurship, I have so much passion in it because if we can save someone money, like looking back into my past, if my mom was financially stable, she would have gotten out of a shitty relationship a long time ago, right? And she never has and never will. And simply because of money. And so if I can save someone else $10,000 a year, $20,000, $50,000 a year to get out of a shitty relationship, like that is my goal. And we've done that as a company. Like we have so many like happy hero stories. And we had a family be able to adopt their baby that they would not have otherwise had the funds, because adopting a baby is really expensive, if we hadn't amended their return and they got a huge refund check the day before that this baby was going to be born. And so there's really, really cool stories like that. Um, in terms of my passion for helping people save money, grow their wealth, become, you know, um, generationally wealthy to help their children too, to break the curses that a lot of us have. But I also, like you mentioned, love speaking, love doing podcasts. And that's only because it gets the word out even more on like, these are things that you can be doing in your life to help you not just save money, but grow your wealth. And I mean, I love to travel and be with my family and do yoga and try to be as healthy as possible. But yeah, those are just some kind of like business and personal passions.
Where are a couple of your favorite places that you've traveled to?
Well, my favorite place on earth is probably New Zealand.
Hmm.
It's amazing. We love it. Um, we're gonna spend a few months there coming up. But I also spent all of June in Africa, and I'd never been to Africa before. And we hiked Mount Kilimanjaro. And that was like probably the coolest experience and like the proudest moment of myself that I've ever been, because dang, that mountain was really hard. 9 days, no water, no electricity, like packing your things, and like 20% of people that attempt it make it to summit or something like that. And so it was really cool
It's like
to,
19,500, right? Something like that.
yeah, it's just under 20,000.
Hmm.
And like nothing could have prepared you to go up there, was my realization. Like the first 7 days are just kind of like a grind. Like it's like, okay, today we have to do 8 hours of hiking. Today we have to do 14 hours. And you're just kind of like going along. But that last day, you're already so sick from altitude sickness, and you have to go up so high, and you can only stay there for 10 minutes because you will only have a certain amount of time to make it back down before the sun goes away. And like, then you have to go past where you even started to keep going down the mountain. I just did not prepare for like how hard it was going down the mountain. Like you're so sore already and
Hmm.
so tired that like, oh, every step was like so painful.
Well, yeah, downhill. I mean, downhill. I don't know about you, but I think it's harder than going uphill. It's harder on your knees for sure, and your
Yeah.
joints and everything, because you're having to like really stabilize your legs when you're going down.
Mm-hmm.
I'm curious about so going back to your original story that we started this conversation with, and then connecting it to a couple of things that you just said. So you grew up in this environment where certainly wasn't stable, and you kind of never knew what to expect as a child, um,
Mm-hmm.
with having the situation be what it is with your parents. Um, and then you found yourself starting to go down that path, and then had this crazy traumatic experience. And then I hear you connecting, or I'm connecting some dots that maybe they don't deserve to be connected, but I'm going to try and we'll see. Is this ability to change people's lives, okay, through helping them financially to where they have the freedom to make choices in their life, to do anything from adopting a child to, being with who you want to be with, not feeling
Hmm.
like you're, shackled by a situation where you can't afford to leave an unhealthy relationship, and then this climbing of Kilimanjaro. And I'm wondering, is there this part of you that um, craves to not only overcome obstacles that are challenging, but to help other people do the same in their life through your work? Is that a fair connection to make?
Yeah, 1,000%. And I try to like share my story to help others, not to be like, oh, like, woe is me, but more of like, anyone can overcome anything. And it's all your mindset. And it's all like, like things are happening for you and not to you. And turning your mess into your message, like really just shifting your mindset is like the key to anything.
Yeah, I didn't get, believe me, I've got a strong radar when it comes to victim archetypes. I've been exposed to a lot of them in my life. And it's something that I have kind of a visceral reaction to. I got none of that from you, which was what was so inspiring to me in hearing your story. Was there wasn't any life is happening to me; it's happening for me, as you reframed it was beautifully. So mindset. Let's unpack that a little bit further. You're human. I'd have to imagine that when difficult situations come up in your life, even to this day, they can be challenging. Do you have a strategy, like when you were climbing the mountain and you were fucking tired and you're like, I don't want to do this anymore? I'm sure getting up in the morning being sore, like what's your mechanisms for working with a positive outlook?
Everyone in my family, so like husband and kids, we all have a huge gratitude practice. And so it's really like trying to keep things positive at all times. And even if you have a hard day, there are still things that you can be grateful for. And even my 5-year-old, he can tell when like I've had a stressful day and he's like, Mama, what are you grateful for today? And there'll be times where I'm like, like, dang it, why are you even asking me this? But he knows, like, as soon as you start listing things that you're grateful for, it's physically impossible to feel any other feelings. And so I think just like having a really strong gratitude practice, knowing that everything is for your good and there's a reason for everything, is really, really key. And then, I don't have this morning ritual that a lot of entrepreneurs might talk about. I don't wake up at 4 a.m. Some days I'll wake up at 5 a.m. and go to hot yoga at 6 a.m. if I feel like it, but some days I don't feel like it, and that's okay too. But just kind of knowing and feeling out, like some days I do need to journal, and some days I could throw the journal in the trash. And some days I need yoga. Some days I just need to walk outside. And so I think it's really just like listening to your body and figuring out what works for you. And I think too, having like a really strong support system is helpful. Like for my husband and I feel like we're good at a lot of times the days that are hard for me, he's in a great mood. And so he knows how to be like, hey, like, let's go on a walk. What are you grateful for? All the things, and vice versa. If I'm having a really good day, sometimes he's having a hard day, and we can easily flip the script for each other, which is nice.
Hmm. Did you do you read like personal development material or listen to personal development podcasts, or is that something that just kind of you've developed on your own and kind of comes naturally to you?
I read so much. Like reading as a kid was my like I could disappear from anything that was happening around me. So I
Mm.
just would like open any book and lose myself. And I still think, I have that um I don't know, ritual of like I just love to read, and they're all personal development books now. As a kid, it was like all the Harry Potter books and Lord of the Rings and those types of things. But now it's all personal development and money mindset and business entrepreneurship. Um, I think right over there on the counter is Leaders Eat Last.
Hmm.
that book. So yeah, I'm always reading personal development. Funny enough, I don't listen to any podcasts, which is funny because I have a successful podcast, but I don't like the noise in my ear. I'd rather read something. So I
Well,
don't
I
like
hope,
audible books either.
yeah, I don't like audible books either. I read. It sounds like reading was a kind of a safe haven escape for you when you were younger, to
Yeah.
escape the madness of everything that you were surrounded by. Is that accurate?
Yeah, for
Yeah.
sure.
Yeah, I used to, as a kid, I won't get into my story, but I definitely had an unpredictable father for sure. And definitely some trauma, like a lot of us have. But I used to be like just addicted to just going out and pretending as a little boy that I was hitting the game-winning shot, in the driveway, and if I missed it, I would do it again until I'd finally hit it and I'd celebrate, or I'd pretend that I was pitching on the mound at Dodger Stadium and throwing the tennis ball against
Aw.
my garage, and it's like it's interesting how we as children adopt we're so brilliant, like
Mm-hmm.
we don't even realize what we're doing when we're doing it, but we adopt these strategies to
Mm-hmm.
keep us safe, and some of it is checking out, and it's really interesting because I I often reflect upon the fact that, like, because I think I consider myself to be a really creative person. Like, especially in my work, like the retreats that I create are highly creative, and I'm tapping into that creativity. And I think that creativity comes from, as a little boy needing to escape the madness, and to fantasize. So I can really
Yeah.
fantasize and dream, so both of us have that in common. So from a personal development perspective, what are a couple of your favorite personal development books? I'm very intrigued by your story, and I'm grateful for you sharing it, and I'm intrigued by how I think there's a lot for people to learn from you as it relates to mastering your mindset, and
Mm-hmm.
this, boy, I'll tell you, I mean, like, victimhood is such a debilitating position to be in. Like, I mean, there's nobody that's a victim that is happy, period. You're not going
Yeah.
to find one person that's a victim that's in joy.
Mm.
Quite on the contrary. And so what are there any books that you could point to that have been helpful to you or that you've read along the way?
The Alchemist is probably in my top.
My wife just finished reading that book last week. That's super interesting that you bring that up. Paulo Coelho, yeah.
Yeah. Love The Alchemist. I loved, if anyone's needing money mindset, the book Rich as Fuck. Excuse my French, but that's the name. Amanda Francis. I think her money mindset is amazing. And she really helped me when I first started my business. She has like courses and podcasts and all the things. Um, I'm trying to think of just like general mindset books and I'm blanking. But I'd say start with The Alchemist.
Cool. Yeah, yeah. Well, I mean, those both, I mean, I haven't read Rich as Fuck, but I like the title, first of all. And and but I have read The Alchemist, and that is definitely a money mindset book, no question about it. Think and Grow Rich would be one that I'd throw out there by Napoleon Hill, all
Mm-hmm.
time, classic on the subject matter. How do how do our listeners get to know you more? Tell us about your podcast. Tell us about your any type of speaking events that you have on the calendar. I mean, obviously, you probably go to your website and check that out. And then finally, how do they find out more about your practice? So maybe some of them who feel like they're not represented properly from a tax preparation perspective can seek you out and learn more.
Our podcast is called Life Changing Money. And we hang out on Instagram the most. So if you're on Instagram at Your Tax Coach, we love to post like daily tips and tricks on how to save money in taxes. Our website's yourtaxcoach.com. I'm trying to think of upcoming events. I'm speaking at Flourish, which is a female real estate agent event in November. And I'm co-hosting a money mindset retreat called Money Moves at the end of September. I don't know when this episode's coming out. But yeah, we always have like speaking engagements coming up, and you can find all of that on our social media.
How often do you speak? How many times a year?
Oh gosh, I feel like it's weekly. Whether it's on podcasts, or a lot of like real estate agent groups have us come in and train their team, or just like any group, anyone that has a mastermind. Big speaking events, I'm trying to keep it to every quarter for like really big events, just because I kind of got burnt out on travel. I want to be with my family a little bit more.
Yeah, it can be a grind being a road warrior. I used to do that as a profession many, many years ago now, and it's not for everybody, and it wasn't necessarily for me. Like, I prefer to keep my travel segmented to places in the world that I can unplug and be completely off the grid and enjoy
Yeah.
the cultured experience. But well, I can tell without having ever seen you speak that you're a terrific speaker. You're a very articulate woman, and also have a
Thank you.
really great presence about you. So I'm hoping that one day I do get an opportunity to see you speak. How many
Yeah.
tax preparers do you have on your team? Can't be just you.
No, we have 30 employees now, but they're not all tax strategists. We have a whole creative team because we just love putting out content and courses and all the things. An admin team. I think we probably have 10 on the tax strategy side, so 10 strategists, and our executive team and our bookkeeping team.
Right on. Oh, so you do provide bookkeeping services for people as well. Well,
Yep.
little did I know that I was ambassadoring a service that you provide, but I am so passionate about people needing to have a bookkeeper. You know why? I want to hit back on that for a second. I've had too many clients that go through a market where, and I'm sure you've seen this with all the real estate agents and loan originators that you represent, they'll go through a market that's a huge downturn. You know, maybe they're used to funding 20 loans a month, and then all of a sudden they're, first quarter of the year and they're averaging 11 or 12, and they're freaked and they don't know what to do, and they're getting ready to cut back on expenses of things that they shouldn't be cutting back on because they're the very things that they actually need to double down on, marketing and
Mm-hmm.
things like that. And and then I'll ask them, like, why are you feeling so panicked? I mean, like, question for you, how many loans do you need to do a month to break even? Like, to just, like, you're not living off your savings. You're
Mm-hmm.
you're doing fine. And the answer is like, I'm not really sure. And then, see, therein lies the problem, is that people then start making panic decisions based upon not all of the information. And this is why
Yeah.
knowing your numbers and having access to it can allow for you to make non-emotional, smart choices with, where you need to
Mm-hmm.
maneuver as a business person. So that's why I'm so passionate about that. Okay, so they should go to your website, which we'll put in the show notes, but you want to go ahead and say that one more time for us?
Yeah, yourtaxcoach.com.
And the name of your podcast show again is
Life-changing money.
Life Changing Money. Cool. I really enjoyed our time together today. I appreciate you making the time in your busy schedule to be with me and sharing so vulnerably your story and the inspiration that I know it will be to many people who hear it. I'm sure that there will be people that can relate and will be inspired by how successful you've become as a result of, I was going to say in spite of, but that's a little victimy, as a result of your experiences. So,
Thank you.
yeah. Thank you, Barbara, very much. And I want to say thank you to everybody that has tuned in for this episode of the 360 Experience. And I hope that you very much enjoyed it. Bye bye.